Let's head to Ghana now. The country's Monetary Policy Committee has held the benchmark interest rate at 14.5%, all in a bid to assess the impact of the previous hike. It has also further urged the government to implement proposed spending cuts to moderate inflation in the country. At the same time, the International Monetary Fund and the World Bank both say that the nation is at high risk of debt distress, and this could further complicate its plans for borrowing, especially from international capital markets. Here's CGTN's Nabil Ahmed Rufai reporting from Accra.
Ghana wants to borrow $750 million from the international capital market, with the option of further increasing by another $750 million to fund this year's budget expenditure. But the World Bank says sub-Saharan African countries, including Ghana, may find it difficult to borrow from the international market due to high debt portfolio and debt sustainability concerns. Ghana's total debt is currently more than $54 billion, about 78% of its gross domestic product. Still, the government says it has met with investors to assure them of the need to support Ghana's economic recovery.
Altogether, these investors have assets under management in excess of over $4 trillion. They also actively participate and hold Eurobonds, and they've been all following keenly Ghana's development story. As a government, we felt it necessary to speak directly with our investors and assure them of the steady progress being made towards economic rebound, anchored on fiscal consolidation and debt sustainability.
Analysts, however, believe the government's move is unsustainable.
The problem with this, though, is that it crowds out funding for the private sector. The more the government borrows, the less money there is for the private sector. The less money there is for the private sector, there's less access to finance, interest rates go up, and the litany of woes continue.
Analysts want the government to widen the tax net in order to raise enough revenue for its expenditure. According to the government's data, out of Ghana's 12 million working population who are eligible to pay tax, only 2 million pay their taxes.
We collect so little tax. That's why we are running those budget deficits year in, year out. And our issue is so poor that the tax revenue doesn't even cover recurrent expenditure.
Ghana is introducing a 1.5% tax on mobile money payments and electronic bank transfers called e-levy to shore up revenue generation. The government says it will also cut its budget expenditure by 20% to tackle the deficit. Nabil Ahmed Rufai, CGTN, Accra, Ghana.